as far as our physical performance is concerned, till Q3, we have done best ever physical performances in all areas, in alumina production, in metal production, and in sales also. So our revenues are going to be good. And as far as our Q4 is concerned, in Q4 now the metal prices are good. Metal prices are also going high. LME is around more than 3100. The concern is alumina prices. Alumina prices has gone down. So that is the area of concern, but we have increased the volume of alumina. That is the area we have improved. And whatever the reduction in prices of alumina, which has led to the reduction in our revenue, is compensated by increase in volume of the alumina. Because last year we did alumina around 20.5 and this year we are going to do maybe 22.5. So reduction in prices will be compensated by volume. So we are trying to match the financial figures of last year, and we are very much hopeful that we will be able to cross that figure, and we are keeping our fingers crossed.
Definitely. Let's talk about the current numbers. In Q3, highest number of sales if you talk about the alumina, highest number of production you are saying. What is the ground reality saying? Is Q3 looking very well?
Yes, Q3, our physical performance till Q3 has been very good. Our revenues also will be good. It will come maybe by month of this month end. And since our efficiencies were also good, the cost was also on the lower side. That's why we are hoping Q3 will be better than Q2.
Right. And in terms of cost, as you mentioned, while aluminium prices have been on uptrend, alumina prices have seen some kind of fluctuations. How do you manage that, and what are the assumptions you are taking FY26 and FY27?
Of course, alumina prices, the pressure will be there because there is an excess of alumina in the market. And going to the next financial year, the similar kind of situation will be there. Average alumina prices, which we are hoping is somewhere around maybe $320, $330 we'll be getting. And we'll be adding 1 million ton more from our refinery. So the prices on the pressure will be there. So what we are thinking is to increasing the presence of selling more and more alumina in our domestic market. The presence in the domestic market is less now. So our marketing team is exploring more sales in the domestic market, because lot of alumina requirement in the domestic market is also there, where fused alumina in the refractory sector and all that, which is getting imported. So that area is a gray area for us, that we have to increase, then only we will be able to survive as far as alumina is concerned. Of course, metal volumes will be almost similar kind of thing, 470,000 next year also we will be doing. And going for the prices, the LME will be good because the consumption of aluminium in the market is there. Some capacity reduction of smelter has been there. So the demand supply will be there, gap. So the prices will be somewhere around LME hovering around 28, 29. So that will be good for revenue, because our 70% of revenues are coming from the metal.
Mr. Singh, you've completed around 1 year in office, and 1 year of turnaround has been there for NALCO. At least the stock prices are saying so. Now for the calendar year of 26, I'm not talking about financial year, which are the things which are going to commission in 2026, whereby your long-term plans are actually getting fructified?
First, what you're telling, the 1 year completion, the kind of numbers which we are getting, I will give the contribution to each and every employees of the NALCO. It is their hard work and all our stakeholders' support from the ministry, which has led to this journey of NALCO doing very good. All our financial and physical performance has been good. This year, we are going to commission our 5th trim refinery. Our target is maybe June, we'll start the commissioning process, and it will take maybe 2-3 months to complete the commissioning process. And this year we are targeting around maybe 5 lakh production from that refinery. Potangi mines is another area where we have to start the Potangi mines, that is 3 million ton mines. Already MDO award is awarded. MDO is in the advanced stage of operation. And it is assured that maybe June we will be starting that mines also. Initially the road transportation will be there, and we have to construct around 18 kilometer conveyor that will take maybe 2.5 years. And once that conveyor is commissioned, it will come to the full scale operation.
Right, we discussed about 26. Now let's move to the 5-year plans which was set by the company. One of them has been the capacity expansion which you have discussed around 30,000 crore. I want to understand how much of that plan has actually been delivered. You discussed about what is going to happen in 2026. Is there going to be more capacity expansion? Because even the ministry has been asking for increasing the capacity, the kind of demand which is going to be there.
Yes, as far as the vision document, if you see the kind of projections which has been given in the vision document, is that by the end of 2030, the consumption of in India, the aluminium consumption will go to around 8 million ton, which is presently around 5 million ton. And by 2040, it will go to 18 million ton, and by 2047 to around 28 million ton. The kind of consumption increase projection is there. That's why it's very important for us to increase our productions. Our present capacity is 0.46 million ton. Our plan is to add 5 lakh tons of smelter, that's 0.5 million ton by 2030-31. After that also we will be having around 1 million ton excess of alumina. So further we can go to adding 0.5 million ton more, converting this alumina into aluminium, because anytime selling aluminium is more profitable than selling alumina, because alumina is excess in the market and many refineries are also coming, and revenue maximization is there in aluminium production. That's why once our this project of 0.5 million ton goes maybe ahead, we will think of going in for one more smelter of 0.5 million ton.